What is going on, you guys, and welcome back to a special video. We have a guest on the channel, a good buddy of mine that I've been basically chatting with over the past little while. Adrian, thank you for coming on.
No problem. How are you, man?
I'm doing pretty good. How are you doing?
Good, good. Can't complain. Panama's awesome. You're somewhere far away as well, right?
We're
We're
both
both kind
remote.
of on vacation. Yeah, yeah.
A work
Oh,
vacation, if
everything's
you will,
good.
right? Yeah.
Yeah,
Well, as I was kind of getting at, Adrian, thank you for coming on.
anytime.
Some people may know you as the Passive Income Investing channel, and another Canadian channel that I've been watching you honestly for years, and it's an honor to have you come speak on the channel because I have prepared some questions for you just so that you can kind of get the chance to tell your story, see what it is that you're doing because it is actually very different than what I do, and it's so funny, Adrian. Anytime I do a video on passive income or these high yield ETFs, in the comment section, they always name drop you. They always say, "I love watching Adrian
Yeah.
for this stuff." You've done an amazing job of building up an audience surrounding this style of investing, and it's something I don't talk to about all that much. So I am very happy to have you on and just ask you some questions and kind of hear your story.
Yeah, man, thanks. I really appreciate it. And you do a really good job too. I call you like the OG Canadian finfluencers or whatever they call it now. So it's funny, even before I started my channel and everything, like I was watching your videos, and I have to say, like I think I've told you this before off camera. Your video was the one that finally made me understand withholding taxes. Like I couldn't understand these withholding taxes like on the US on whatever. And when you put that chart and you broke it down, I'm like, oh, I finally understand. So once in a while I've always kind of went on your channel just more for the technical stuff. But in terms of investing, yeah, I mean, I my focus is 100% on income oriented investing, which we'll talk about, I'm sure today. Very excited to appear on your channel and to inform your users of what my channel is all about, what my style is about as well. So
Absolutely. Well, hey, why don't we just straight up dive into that? Why don't we start with like a top level overview, Adrian? Um,
sure.
Passive income investing. What is your investing philosophy? What is the strategy that you use that are currently using? And like, I know your story because I know everything that you're doing, but pretend I don't know you. Let's start with that because yeah, a lot of my audience will not. But why do you feel that this is the strategy that's working best for you?
Yeah, so my strategy is really just like the name of the channel says. I'm actually very lucky to actually get that channel, Passive Income Investing, that name. So it's really an income oriented style where the main goal is really to generate passive income. So it's income oriented. So that is the priority, generating income. It's a buy and hold strategy. It's like a mantra I always say, right? Buy and hold. So my whole intention is really not to buy low, sell high, at what one point sell later on to make a profit. It's really just to build my income stream
Mm-hmm.
instead of focusing on building your wealth. So that's like the best way I could kind of explain it. I don't know if that makes sense to you, but it's all about that income stream uh, as a priority. So you're always buying, you're holding, and you're getting paid every month, and you're trying to build that income stream. So it's the stuff that I invest in are really income oriented. So they have high
Mm-hmm.
yields.
Mm-hmm.
There's income oriented strategies on them, which we'll discuss. And it's getting easier and easier to be an income investor. It's getting more popular, but I'm not really surprised because this style of investing usually gets more popular during the bad times. Gets more
Mm-hmm.
attention during the bad times, as you've known.
When all the growth stocks are
2022,
crashing and everything, yeah, when everything's
not
crashing
really a
down,
great time,
yeah.
right, for every investor, but especially like a growth or even an index investor because you don't really get much yield. So my strategy, the way I could explain it is you're a lot less dependent on stock prices and what the stock market is doing. You're more dependent
Mm-hmm.
on time itself. So it's very
Mm-hmm.
straightforward. It's definitely income oriented. So I am definitely a lot more popular with the older crowd
That was what I was
because
gonna
that's
ask. That was my next question, actually. But yeah, you're more popular with the older crowd. They're more seeking income.
yeah, I mean, retirees, people who are retiring, about to retire, what's their main focus? It's income, right? It
Yeah.
stops becoming really growing your wealth as much as you can. You want to try to replace that income from your job,
Mm-hmm.
basically. So you can't really rely on the Canadian and the provincial government pensions. You have to
Mm,
have, that's why we have RSPs, and maybe you're lucky enough to get a pension plan which your work, but even those are kind of disappearing. So this is a good strategy because it's really a cash flow strategy that will help you supplement your income, but it could be used by everyone, not just older people. I use it. I believe it's one of the best and most straightforward ways to
mm,
become financially independent.
mm,
I think it's the quickest route to get there when we're talking about investing,
mm.
right? So it's definitely great for everyone, but it's typically more popular with the
Older
older
folks.
crowd. But even so, young people like it because having cash flow, even if it's like an extra 100, $200 a month. I have in my community 20-year-olds that are starting slow with well simple, and they're making $100 a month, and they're like, oh well, I could pay my gas this month and my
Yeah.
phone bill, and it motivates them to get to 150 a month and 200 a month. So
Well, it's
young
so
people
cool.
could do it too.
It's so cool. We had I just saw a post somewhere, possibly in my Discord or something, but just one of our students had just crossed over the $200 per month landmark, and like like you said, it doesn't sound like much. It's to pay for your gas, this or that, but it's more about like the achievement of saying, hey, that is passive income that like I literally just I kind of take my hands off and I'm earning this and it's growing month after month, year after year. So the idea is that you're building up you personally is like over the next number of years, you're trying to get that passive income stream as big as possible so that
As big as
ultimately
possible.
it's just constantly growing and growing. Okay.
Yeah.
So
the
is it sorry, go for it.
No, I was gonna say the if you just think about life in general, the bigger your income stream is month to month, and this is passive income we're talking about.
It
This is,
truly
you're
is,
not
right?
working for it, you're
Yeah.
making money while you're sleeping. The more doors open in your life, the more
Yeah.
opportunities come about, right? You have more options. That's the way I
And
like to say it.
and you're like living proof of that, right? For we mentioned you're in Panama, but maybe briefly dive into your story. Like what are you doing now? Where are you from? Because you've essentially used this passive income and geo arbitrage. Like you're living proof of that. So just maybe speak on that.
Yeah, I've been through it. I lived it and I've done it, and I'm just sharing. That's what my channel is really all about. In the end, I'm just sharing my investing journey, how I've done it. I never claim that this is the best investing strategy. I'm not against the growth strategy, the dividend
Mm-hmm.
strategy, or the income strategy. It's just the one that works best for me. So I'm sharing it.
Love
So
that.
my background is a pretty boring generic background. I born and raised in Montreal, Canada. And my wife and I both had pretty good careers in IT. We have no financial background whatsoever. We both had pretty good IT careers. And just, I was starting to think about investing and just dabbling with it. But at the beginning, the beginning of our marriage, when we, settled down, got our first condo, we focused pretty much a lot of our disposable income to paying down our mortgage first, which is always a good thing. And I wasn't really investing seriously. I was kind of doing what usually people start by doing, stock picking. And now that I know what I actually was back then, I was a swing trader basically. So I invested in things like Bombardier, Air Canada, BlackBerry, whatever was in the news that took a big hit, because I'm like, I'll just put some money in, maybe in 6 months, a year, it'll go up. And to be honest with you, I actually got more, I made more money than I lost, but it was a very time consuming strategy. So then I saw Kevin O'Leary's speech about dividends, dividend investing, and that pretty much changed everything. And still just dabbling with it, I started switching over to dividend stocks, still focusing on the mortgage. But after 7 years, our mortgage was almost finished because, we had a good IT career. We got
Paid it down
promoted, both of
aggressively.
us.
Yeah.
So yeah, we didn't have, we decided not to have kids. So that obviously, helps the disposable income situation. So once the mortgage was about to be paid off, we're like, well, listen, what are we going to do with this disposable income? So this is when I started looking at, dividend stocks and dabbling more in them. And I quickly learned that, picking and choosing individual companies with high dividend yields, like 7, 8, those are really risky because those
Mm.
are going to be the first companies to cut their dividend.
Mm-hmm.
So I like the high yield, but I want more than 4 and 5%, because that's pretty much what you're going to get with stocks like Bell and TD and CIBC, right? So how could I get like 8, 9, 10, but with safety,
Mm.
consistency? So that's when I started discovering the covered call ETFs, the split share solutions, and etc. And that's pretty much all she wrote. So we tested it out. Once we got to about $1,000 a month in passive income, we said we crunched the numbers and we said, you know what, if we sell off our paid off condo, invest it all, we'll be making this much. I think it was $4,000 a month.
Yeah.
We'll be able to live for free, pay a rent, be
Yeah.
financially independent. My wife would be able to quit her job because she wasn't really having a good time there.
Yeah.
So that's exactly what we did. December 2019, we pulled the trigger, and that's all she wrote.
Too cool, buddy. Well, no, I knew that story, and it's like I always love hearing from people that have actually done it and that are living it, right? You are literally
Mm-hmm.
speaking from experience there, and it's kind of it's proof of concept that it works. And you've read through the numbers with me and been so generous in sharing, and it's like it truly is passive income, and it's like you said, opening a lot of doors for you. Maybe let's
Yeah.
move on to that next my next question here. You mentioned things like covered call ETFs and split funds.
Mm-hmm.
I picked your brain on this. Why don't we start with that? What do you think of covered call ETFs? Good, bad, avoid?
It's a love affair. I love covered call ETFs. They are what I usually refer to as the bread and butter of my strategy. For me, it's once I discovered them and really figured out, because they use options and you gotta, it takes a while to understand how they work. They could seem a bit complicated, but once you really understand them, it's not that complicated. It's very, very simple. So covered call ETFs are absolutely, I love them. I think they're really designed for someone who's a bit more of a skeptical, pessimist investor rather than an optimist. It's really they're
Mm,
really designed for investors who would rather get their returns now rather than later.
mm.
If that makes sense to you, right? So they're really designed for what I would say more defensive investors,
Yeah, that makes sense.
income-oriented investors who are prioritizing cash flow over whatever else, long-term growth or overall total return. And they become extremely popular in Canada, especially this year. Canada
They
has
have
actually
been,
gotten
yeah.
a lot more than in the US. The US is the biggest stock market in the world. They have a lot of great ones in the US, but they're getting very, very popular in Canada just because of that income seeking, that need for income. And they all kind of started being invented in about 2011
Okay.
when this was right after the 2008 crash when interest rates were at the bottom.
Yeah.
Getting yield was extremely hard, right? When interest rates are low, you're not going to get nothing with government bonds, or
Yeah.
fixed income
Yeah.
just didn't cut it. So this is when these products started all coming about in Canada. So 2011 when they first started getting launched. So a lot of these products are now over 10 years old.
That's
So
still
they're
really
they're
it's that's still young in the big scheme of things. You know what I mean? Like in the big history of things. But yeah, 10 years old. It's fascinating. I didn't know that stat. I didn't know that it was also very popular here in Canada relative to the US. But that does make a ton of sense. And it's like, I mean, I know from my background and stuff, there's a lot of people that don't feel comfortable. Let's say writing covered calls themselves, but they do have the
exactly, yeah.
solution of going out, like either the education wise, comfort wise. Maybe they don't have the platforms that allow them to do that, but then you do have these solutions of funds which will essentially do the heavy lifting for you. That's the way I like to look at it. If you would agree or not.
That's exactly right. That's a great point. And it's an ETF. So just like a
Yeah,
regular ETF, it gives you the privilege of not needing to stock pick, right?
yeah,
Owning
yeah.
either an index ETF or even a dividend ETF. Instead of picking and choosing the best dividend companies in Canada, you just choose a Canadian dividend ETF. They're all there, they're all together. So
Mhm.
obviously you pay a management fee. It's the same thing with the covered call ETF.
Yeah,
So it's still an ETF. The
yeah,
underlying are still stocks,
yeah.
but the fund manager is simply writing covered calls for you
Hmm.
to generate that additional yield and adding that defense or lowering your volatility. So that's essentially what it is.
Maybe a quick question here. Do you have any
Yeah.
favorite fund providers? Like I know there's so many to choose from, and I follow your channel. I know that like it could be scary for a new investor to be like, well, what do I pick? Do you have kind of a list of
Yeah.
your top favorites that you vetted? You're like, hey, these are the ones that I feel comfortable with.
Yeah, well, in Canada, there's really five, six big providers of covered call ETFs. The big one by far is BMO.
Yeah,
So
BMO.
BMO
Yeah.
has about 60, last I checked, 60 to 65% share of all the covered call ETFs in Canada. So
Wow.
they're number one by
Dominant.
a
Yeah.
huge margin.
Hmm. And
So
that's what a
you
lot of people know.
typically,
They hear about all the BMO ones. That's what actually draws them into covered calls, and then they find other ones. But that makes a lot of sense to me.
yeah, I've had them on the channel several times, done videos about them as well. So they're what I like to call the most basic vanilla covered call ETFs, which is
Mm.
typically what I would suggest for newer investors who are thinking about this strategy, trying it out.
Hmm.
So these ETFs are very straightforward. You have the big reliability of BMO, very blue chip oriented, and they're not leveraged or anything like that, so you don't have to, they're very great starter ETFs where you could easily get, 7, 6, 7, even about 7.5, 8% yield on
Hmm.
their covered call ETFs. They have about 8 or 9 of them. So
Hmm.
but BMO is just one of them. There's other ones. I think number 2 is Harvest.
Yeah.
Very popular,
Harvest.
growing,
Yes.
growing. They've been on your channel as well. Your dad's done videos on their ETFs. Really, really. So they have covered call ETFs. There's Horizons, there's
Yeah.
Brompton, CI, Evolve ETFs. There's a bunch
They're
of
all
them.
yeah.
And
A ton of other names.
yeah, these are all. And what's cool is that each one of them kind of has their own cover call strategy. So writing covered calls is not really straightforward. It's really an art.
Mm.
It's a whole, and each of these providers has a different strategy. Some will be a little bit more aggressive on the calls, so a little bit more yield, but less capital appreciation potential.
Yeah.
Some are more conservative. I would put BMO in really the more conservative
Gotcha.
basket,
Gotcha.
where they'll never write covered calls on more than 50% of the portfolio. So half of the portfolio will be doing
Exposed to
whatever
the
the stocks
markets.
do.
Exactly. Yep.
And then there's moneyness also, moneyness of the options. Are they at the money, out of the money? So that's
Mm.
typically when I refer to the aggressiveness of the options. So
Yep.
the more out of the money they are, the less aggressive they are, which
For
means
sure.
lower premiums, but more capital appreciation. So everyone has their style,
Gotcha.
but the stocks inside are very, very similar across all of them. And
Yeah.
that's what people need to remember, that you're investing in a covered call ETF, you're investing in a basket of stocks
Yeah.
with less volatility. That's
Gotcha.
basically it. Yeah.
Cool. And a question that throws me for a loop, how does that compare to like split funds or split shares? I've seen you do many
Yeah.
videos of them, and in all honesty, I haven't got to dive too deep into those. But I get questions a lot on the channel. What is a split fund? What are split shares? And I'm like, I'm not the person to answer that
Split,
question for you. Yeah.
well, let me just put it this way. It took me a long time to understand them. They're
Mm.
probably the most complicated fund out there. And this is what usually scares people, including myself. There's a couple of months where I said, no, I'm staying away from this just because I didn't understand. I saw like an expiry date, maturity date, and I said, screw that. I'm not going to
Like,
invest in
yeah, all
this.
my
But
money's done. All
split
my
share
money's
funds,
done up. Yeah.
yeah, I mean, the best way to kind of describe them, they're basically covered call ETFs with leverage. That's one of
Okay.
the easiest ways I could explain them. They're called a split because through this complicated structure, they that's where the leverage comes in. So it's called the split. So basically, think of a basket of the 6 banks,
Yeah.
right? The 6 big banks of Canada, which is one of the most popular split share funds styles or basket of stocks in Canada. So what
Yeah.
they do is they have that portfolio, and then they have 2 ticker symbols instead of one. That's where the split comes in. So you have the preferred share, which kind of acts like the debt of the company. So like Bell Canada, TD stock, they
Yep.
they have a bond. They have bonds, right, too,
Yeah.
right? So think of it like the bond of the portfolio of this corporation, and they're actually corporations. That's why they're called split share corporations,
Hmm.
right? So it's a basket of stocks. There's a preferred share and a Class A share or capital share.
Yeah.
And what happens is that the preferred share usually just stays at $10 a share forever. it pays a 5 or 6% dividend yield. It's obviously the safer, it gets the priority in terms of the dividends. So that's how the preferred share are funded. So if you're buying a split share fund preferred shares, you're pretty much getting the dividends of that portfolio.
It's almost like the way I always looked at it was it's almost like a fixed income type asset. Even though it's
It
technically a
is.
share, if you look at it called a share, you might think it's equity. It very much behaves and is very much basically like fixed income in a sense.
Yeah. And that's exactly why there's a maturity date. It's because of the fixed
Oh,
income, just
right.
like a regular bond or coupon that there's a 5 year term or 3 year term. That's why these
Right.
split share funds have a maturity date. A lot of people, including myself, are worried about that, but it's not because they want to end the fund, though they usually typically always just extend it for another 5 years. So preferred share is kind of like a bond. It's a good alternative to say like of a fixed income. You'll get your 5-6%. It's
Mhm.
very tax efficient because it's
Mhm.
dividends. It's
Mhm.
not interest.
Mhm.
So fixed income, when you're buying bonds, it's typically interest income. This one
Mhm.
is dividends because it's literally you're getting dividends from those six
Mhm.
stocks.
Makes
The
sense.
class A share is really where the magic happens because all the movement of the stock prices
Mhm.
goes to the class A shares. So
Mhm.
that is where the leverage comes in. It's synthetic leverage. It's not let's borrow money so because all the stock price movements up and down go to the class A shares and there's usually an equal number of shares of between preferred and class A, that's what makes them leveraged. So if the six banks do really well, the class A shares will do really well, even better
Gotcha.
because
Gotcha.
they capture all of it.
All of the movement for everything. Okay, I understand
Yeah.
that. Yeah.
And so that's where the leverage comes in, but they're also writing covered calls, and all that covered call income goes to the class A shares. Preferred shares get not no capital gains whatsoever, and option premiums from covered call are capital gains. That
Hmm.
all goes to the class A shares. So that's why these class A shares are typically very volatile and have humongous yields.
Yeah,
Like
they're
it's
like
not out of the
over 10, like
ordinary.
yeah.
15 is completely normal.
Wow.
Yeah. So it's very interesting. I would say, I hate saying this, but I have to say it to be honest. They're becoming more and more obsolete, unfortunately, or unnecessary because of all these new leveraged ETF products that which we could
Yeah.
talk about,
Yeah.
which are, they're much easier to understand. They have 25% leverage or 33% leverage, and
Yeah.
that's it. They don't have the termination date and all this other stuff you have to deal with because it's a closed-end fund, unlike an ETF, which is an open-ended fund.
Gotcha.
So they have
So
higher
you
fees as well.
so you don't
So
so what I'm picking up is that split shares do have a room in, let's say, your portfolio, someone who's really up to speed with it. But with all of the new products, like I know HDIF, we've had the conversation on, and comparables, but funds of that caliber, you're saying for a new investor or anybody seeking yield, that's becoming such a viable product that it's like maybe they don't need the split funds.
exactly.
I personally feel still a little bit scared of them even after your explanation. So I can see how investors would feel the same.
Yeah,
But that's
yeah.
but
Most
that
people are scared of them because they sometimes miss dividend payments. So
was
there's
one of
a
my upcoming
rule.
questions actually. Yeah.
Yeah, there's a rule in a split fund where if the overall value or the net asset value of the split fund, so
Mhm.
preferred share and class A share, that's called the unit NAV, the unit net asset value, is under $15,
Mhm.
there's going to be no monthly distribution for the class A shareholder until it goes back above $15.
Oh, okay.
So that scares a lot of people, but I've discussed this with split share fund managers. It's actually a fail safe. It's to preserve the fund long term, and that's why you have split share funds that are 15 plus years still going strong. So the way I look at it, if you're getting 15, 16, some of them 18% yield, if you
Yeah.
miss a dividend once in a while, which you'll miss typically during a crash,
Mm.
it's not the end of the world. You're even if you count that missed dividend, you're making very high yield. Plus, another thing I would tell viewers is look at the total returns of the Class A shares over 10, 15 years. A lot of them are beating the S&P 500.
Hmm.
which is extremely hard, which is the holy
For
grail for
sure.
any active manager.
Of
90%
course.
can't do it.
Hmm.
So it doesn't work well with, it works really well with dividend stocks that are consistently growing their dividends over time. So things like
It does.
Enbridge,
It does work well with those companies.
very well. It doesn't
Gotcha.
work as well when it's too specific.
Okay.
Things like specifically just life insurance companies or
I see.
specifically just oil and gas companies. But the
Mhm.
most successful ones by far are the ones that just have the six banks, because the six banks of Canada are, they always outperform the
Yeah,
Canadian market
for sure.
overall, and they keep growing their dividends. They're absolute monsters, right? So
Well,
um,
I want to go back to what you said there and kind of press you on something where we have a
sure.
difference of opinion, if you will. It's just one of the most common maybe slams against this style of investing.
Yeah.
Um, how would you address the risks when people say like, these higher yield funds, your capital is just depreciating, and when you look at the stock charts, those are going down, down, down. It's like, yeah, you made such and such amount, but your portfolio is down 30%, 40%, sometimes more. How would you go about addressing that?
I get it all the time.
I
It's
bet
it's
you,
probably
yeah,
my
yeah.
it's my number one concern, criticism, and I actually made a video on this exact topic. I would say the easiest thing I would say, and the first thing I would say is stop looking only at the stock price returns. Look at the total returns.
Mm,
Think about it. If there's a stock that has no dividend,
yeah.
no income, like a
Yeah.
Google, like an Amazon,
Amazon, yeah.
Facebook, the total return is basically the stock price return. All
Correct,
you could
yeah.
look at is the stock chart, and that's it. But if there's a dividend stock or high income fund, whatever it is, that gives a 4 or 5% return, you don't see that in the stock price chart. You have to
Mm,
look at the total return.
mhm.
So think about it this way: if you're getting 15% yield, and let's say your capital is going down by 5% for 10 years. Let's say this happens for 10 years. I'm thinking of DFN. It's one of the probably the biggest. It's one of the most popular split share
Yeah,
funds.
I've seen lots of DFN, like
So
lots.
DFN is
I always see
down.
that ticker thrown around everywhere. That's
Yeah,
split share fund.
exactly. If you're getting 15% yield, even if you're losing five, or your stock price is going down 5% every year, you're still
Mhm.
making a 10% annual return,
Right, total
right?
return is, yeah, yep.
Which is better than the overall Canadian stock market,
Mhm.
better than XIU, better than
Mhm.
ZCN, better than all those, and even pretty much on par with the S&P 500. So I
Mhm.
would say the most important thing is look at the total return, not only the share price return. I can give you another example. Let's say there's a stock that's $10 a share, 10% yield. It stays $10 for 10 years and never goes up. After 10 years, your total return is 10% a year
Yeah, for
on
sure.
average, right? It's 100%. So
Regardless of how it's delivered to you, whether it's share price or dividends,
exactly. And what I
gotcha.
like about the income strategy is, number one, if you want, you could reinvest it,
Hmm.
drip it,
Hmm.
if you don't need the income. But typically people are living off of this income. But
Right.
I'm getting every year I get that 10% realized, not realized, right? I actually
Yeah,
got the money.
it hits the account. Yeah.
Whereas with index ETF, let's say, and I have nothing against index ETFs, I think they're very mainstream for a reason. They work.
Yeah.
You're
Yeah.
getting almost no yield. So you're really dependent on not only what the stock market does in 10 years, but it depends on you actually selling it to make your money. If you don't sell it, it's completely unrealized, unless you're counting that little yield that you're getting. But most people, what do? They just drip it
Yeah. Yeah.
pretty
Yeah.
much. So
Yeah.
this is going back to my initial, where I say this is really a buy and hold strategy. I don't need to
Yeah.
sell anything. The money just comes to me passively.
So
And
is it fair?
if you're not,
Sorry, I was gonna say, is
oh,
it
go
fair to
ahead.
say one of the terms I've used in the past? I don't know if you use it, but it's like you're buying income, right? It's like you're buying and
Yes,
securing income. And is that fair to say that's the way you look at it? Where
it's
you're
exactly what I look at it, how
so
I
you're
look at it.
so you're buying your cash flow, which is growing month after month after month, and like you said, that's just how you're getting your returns delivered to you. That's how you're getting your money back to you as an investor. And whether the share price goes down, like let's assume your portfolio goes down $200,000, that's not as relevant to you because let's say your income stream is either still the same or growing year after year after year, and that's ultimately what you're living off of. Is
Yeah.
that kind of a good summary?
Yes, and I've lived through it, so I know that that's true. So
Mm.
when I sold my condo and invested 450,000 one shot, it
Wow.
was the worst timing in the world. December, December 2019.
Right.
Let that sink in. You know what
Yeah.
happens 3 months later. So I was down 30, 35%, but it made no difference in my life because I still getting that 4,000 a month pretty much. Is it perfect? No. Some split funds will miss.
Right.
It's only normal. But this is where your personal risk tolerance comes in. You don't have to have split funds. And not all split funds are made equal. You have some really, really boring split funds
For
that
sure.
give you 10% yield that have never missed a dividend that are very boring. Then you have the more exciting ones at 15, 16, 18, 20. So it's all up to you. How secure do you want this income?
Right.
Right. So that's where you could tailor and that my whole channel every month since 2020, March 2020, I basically released my portfolio
Yeah, I love
and
that.
I've learned a lot. And what I discovered is the thing that really stays consistent typically is the covered call stuff,
The coverage call,
not
the distribution.
not the
Gotcha.
single high yield ETFs. Those have all cut their dividends. I went from 120 stocks to now I have 15
That's
total.
insane. That's such a streamline.
So
So you just been trimming, and finding kind of your little pot of gold or your core holdings.
exactly. Yeah, right now I'm making, I think 10.69% yield overall
Wow,
on maybe
that's a
600,000. So in 2020, like I said, the income stayed
yeah.
relatively stable. 2021, I was up 100,000, 150,000, because people also have the idea, covered cost that doesn't appreciate. It does. It will do whatever the stock market does
Mm.
to a lesser extent.
Right.
So there is a bit of drag with the
Mhm.
covered call stuff. So if the market goes up really hard, you'll still go up, but not as hard as an index fund, for example.
Mhm.
So in 2021, I was up, let's say 100, 150,000, 20, 25%.
Yeah.
My income didn't change.
Yeah.
Now I'm back down to, I was down maybe 25%. I just checked today and I'm down maybe 18 or 17%.
Yeah.
My life is still not any different. So
Yeah.
this is
You've
why
got
I keep saying I don't care about stock prices. It's a privilege not to care
that's so cool.
because
Yeah.
you're buying income, right? So I'm in my mind that 600,000 I invested or whatever it is, it's gone. I
Mhm.
bought $5,000 a month or forever.
I
I'd
love that.
rather
Yeah.
do it that way. You know what I mean?
I,
Hopefully that
it's
answers.
and that does answer my question. That's such a cool way to look at it, Adrian. And it's such a different way to look at it. You know, a lot of people they can't wrap their head around that, but then some people
I
that
know.
do, it's a lot of people I could see it's hard for them to wrap their head around because they just look at the numbers and they see that. But what you're saying is, geez, the share price can go up and down. You're worried about for your life living out in Panama. How much income am I getting? And you've already secured that and bought that.
Yeah,
That's super cool.
exactly.
Well, I will
Exactly.
just say we have 5 minutes left on this recording session. I can see this timer counting down, so I'm like feeling crunched. But I want to finish off with maybe one more question here.
Sure.
And I know, actually just about a month or so ago, I like literally picked your brain for an hour. I did one of your little sessions, and you were so helpful to me. Like I'm just saying that honestly, and I did tell you that after, but it was we were talking about this whole passive income thing for just my life and my not my life, but someone in my life.
Yeah,
And the amount of insights you provided was just like stellar, man. And I really appreciate that.
you're welcome, my friend.
You are the
Anytime.
king of
That's what
you are
I
the king of
do.
it is. And
Yeah.
basically what I wanted to say was tell my audience, for those that are interested in passive income and want to learn more about, what you offer, what you do, like how can you help people? And yeah, we got about 5 minutes left.
Yeah, sure. So obviously I have my own YouTube channel, right?
Yeah,
Passive
which
income
is great.
investing. The best way to really go through the videos is through the playlists. But my most popular video by far is the monthly portfolio unveils.
Yeah,
Everyone just
of
wants to see what
course.
I have. And every month I show everything, my book prices, what I've changed. My intention obviously is not to do that many changes, but I keep buying, right? So it's mostly what did I buy this month. So I disclose all that stuff on my channel. My mission is, what's really important to me is honesty and transparency.
Yeah, I
All
agree.
what I talk about, I own myself typically. In terms of, I have a website, and there I basically came out or created a product called the DIY, the Ultimate DIY Investing Package. It's
Hmm.
not specifically for income investing, because I'm also not against growth investing or dividend investing, but it's what I like to call a companion tool, which I basically just started using myself, and just to track various ETFs, and it grew and grew and grew. So there's sample portfolios you could sort through. I have like a list of split share funds and my own personal risk rating system. So there's all kinds of
It's a
cool little
very
things
valuable
to that.
it's a very valuable resource. Like I've gone through it, I've used it, and I see the feedback you get. Like literally the testimonials you're sharing from them. It is very, very, very valuable. I'll
Yeah,
just say
it's
that.
not expensive. It
No.
comes with lifetime updates. I'm planning to update it at least once a year. And it's good for American and Canadian investors. There's sample portfolios for both, because I like to cover both markets. Definitely a little bit more income oriented, but there's also growth uh, strategies in there, a growth sample portfolio. Income, for example, I have three. I have like a general income one, which I typically recommend, lower risk one, aggressive income. Like I going before, it's all about tailoring it to your own risk level.
Mm.
So it's a nice little companion tool. And I also offer, like we did,
Yeah.
a one-on-one service where you could just book me for an hour. Obviously, I'm not a licensed financial advisor. This is just a friendly conversation, but you could have a 1 hour Zoom with me. You could tell me, ask me anything you want, go over your situation like we did, and we could talk about it. So the most common situations I get is actually what you came to me with.
Yeah. Yeah.
For whatever reason, I have a big chunk of money. Either it's a house sale, an inheritance, I retired, whatever it is. What the heck do I do with it?
How do I
That's
deploy
probably
it?
my
What's
most
top level
common.
stuff? Literally,
Yeah.
like, and like the way you broke it down, Adrian, is like, everybody, like you said, when they're in that position, they have this big chunk of money. Typically, if this is them, and it's like, and sorry, I'm on the time crunch here because we got a minute 30, but they know they want this income. It's just about like, how do I do it? Like, how do I do it in terms of
How do
the
I do it? Yeah.
funds, like, and all of those little things that you were able to just cement for me and connect the dots was so valuable. And like I think you've been recently posting some like testimonials from on your
Yeah.
channel from other. It just looks phenomenal, the amount of help people are getting,
Yeah.
right? Which is something I think people should definitely check out, right? Just to see like your actual feedback you're getting from that, right?
Yeah, we have a Facebook group, 13,000 members, and every day there's people,
Nice.
oh, I just got $200. I just hit my goal of 200 a month. I just hit 5,000 a month. It's great to share all these success stories. And I've done hundreds and hundreds of them, and we're all in it together. We're all trying to do the same thing,
Right.
right? Just having the best life we can and do the best we can with our money. And most of the sessions, you'll be surprised, it's more to give them that courage, right? There's
Mm,
always, maybe the wife is not into it or doesn't understand, or maybe sometimes it's the husband or whatever it is. And
maybe less technical, more just
yeah,
like
I love doing them because I get to
yeah.
see different scenarios. I know what the common questions are, and then I can make content about them too. So it's
Absolutely.
really
Well,
interesting for me.
I think we got like 15 seconds left. What else is this? Thank you for coming on the channel, Adrian. Everything will be linked down below. And I totally vouch for everything you said. Like I said, I've been an actual user of your service. What is going on, guys? So the Zoom recording just cut off there. This silly thing with 40-minute Zooms. I'm on the free plan. But what I was getting at was I just wanted to thank Adrian for coming on the channel. I'm excited to then go on his channel in the future just to kind of get in front of his audience. But I vouch for everything Adrian does. It's a very different style than what we do, but for the right type of investor and for someone that understands what they want, what they're looking for, it's so cool to see the different ways of investing and the different means and strategies that you can partake. And there's so many benefits to the passive income style of investing. I absolutely agree with that. I still like what we do, but like I said, there's a time and place for every strategy out there for the right type of investor. So if you haven't already gone over and subscribed to his channel, please take a moment to do that. I will link his stuff down below. What I was saying, I don't know if it got cut off or not, but I actually did one of his little coaching sessions, one of his little one-on-one help sessions, and it was so valuable. It was just beyond valuable. The stuff he knows, the funds he was able to point me towards, the clarity he provided for the questions that I had was just A1. So I vouch for that. If that's something you're interested in, go check them out. That DIY bundle is so affordable at the end of the day. It's something that I think can help out so many investors. So Adrian is someone that I very much support in what he's doing, and I would highly encourage you guys to go check it out. So again, all the links will be down below. Thank you, Adrian, for coming on the channel. If you guys enjoyed, give this video a thumbs up, subscribe. Our academy is down below, of course, as always. But as always, I thank you guys for watching. Hope you enjoyed, and I'll see you in the next video.